Ladies and gentlemen, welcome back to the channel. It is time for an intraday update on AMC stock. We'll also talk about Mullen Automotives because I think both of these names are being targeted in a shorting attack here today. Now, on top of that, you have breaking news that just came out from Fed Williams, and boy, does this not sound good heading into our big CPI report coming tomorrow, guys. So let's get into all of this information, everything you guys need to know so far on the day. Hit the like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. And if you guys want to come trade with me live in real time, link down below in the description of this video as well. We are hedging out our portfolios right now, even as, like I mentioned in the last video, Goldman Sachs, one of the most bullish firms and banks on Wall Street, is telling you to go buy puts to protect your portfolio. That's when things have really gotten bad, when even the most bullish bank on Wall Street is telling you, hey, shit might get bad and it might get bad quick. So just a fun fact for you guys. Now, let's get into all of this key information. I have some notes written down from Fed Williams' speech today. This headline says, John Williams, it will take time before inflation gets back to 2%. But what he also said that caused bigger market reactions was, quote, they are not done tightening, let me paraphrase here. They're not done raising rates if they need to. If inflation continues to go higher or stays higher for longer, they will raise rates again. And that's the biggest troubling sign, I would say, heading into tomorrow's CPI report, because it's very likely that the Fed members actually got this CPI report this morning, right? Typically, they do get these reports early. So they probably got it this morning, and Fed Williams is saying that, hey, if inflation remains too high or goes higher, we will raise rates again. We will rug pull you. And considering the timing, again, CPI report comes out tomorrow morning, doesn't look very good. Let me just tell you guys that right now. Probably going to get a hot CPI report coming out tomorrow. So that was one of the quotes he said. He also said that there is no reason to cut rates this year. Now, the markets, if we go to Fed Rate Monitor tool, this is a tool that I love to use on investing.com. For June, 77% chance of getting a pause, right? That's what we're expecting. Now, in July, markets are expecting a 55.7% chance of a pause and a 31% chance of a rate cut in July. This was closer to 50-50. It's come, down where a majority of people are expecting a pause at the July meeting. Interestingly enough, 13.5% of investors are expecting a rate hike in July, which is wild. And you'll see this number go higher if inflation does come in hot tomorrow, and that's not going to be good for this market. But a rate pause. Now, a lot of people have pointed out that it's not the rate hikes that's the problem that usually causes downside in the markets. It's when the Fed actually cuts rates, because why are they cutting rates? That's the biggest problem. If the Fed were to cut out or come out tomorrow and cut rates, markets would fall because they would say, why are you cutting rates? What is coming? Like, what is the purpose for you cutting rates right now? So, believe it or not, expecting a rate cut in July means that from now until July, potentially markets are going to get a lot worse. And you're seeing things like volatility going higher today, and you're seeing a lot of very bearish put positions being placed on the S&P 500 as well as the QQQ. And the higher this probability gets of a cut, the worse things are going to be. At the same time, the higher the probability of a rate hike becomes, again, the more bullish or bearish you kind of have to be, right? Because markets are on a valuation that really doesn't make sense if rates continue to go higher. They're expecting rates to come lower. Now, why do they come lower? That's going to be the big question. Is it the debt ceiling? Oh boy, well then you got some problems. And today here in After Hours at 4 p.m., you're going to get Joe Biden meeting with, what's his name? McCarthy. And McCarthy rejects short-term debt limit ahead of pivotal meeting with Biden and congressional leaders. So he just came out and outright rejects the short-term debt limit fix. So the dividedness is worse than 2011, I would say. The last time that we got close to defaulting on our debt, the last time the stock market dropped about 21% because of the debt ceiling, and that was because the S&P Global downgraded the American debt. Right. It makes interest rates higher. It makes, credit worthiness a little bit lower. Some institutions, might get closer to not being able to invest in American debt. Overall, not a good thing. As Janet Yellen would say, an economic catastrophe if that were to happen. So that's kind of what we've faced so far here on the day. And again, today in After Hours, you're going to get more updates from this. And then tomorrow morning, you're going to have the inflation report. And based off of what McCarthy just said and what Fed Williams just said, it's not looking like a bullish outcome for either one of those things. Now, Fed Williams also said they are not seeing evidence of a wage price spiral. This is pretty well known at this point. It did cause the markets to move up a little bit, but really this is going to be the big story of the day today as well as tomorrow. So there you have that. Now let's talk about AMC stock, because AMC as well as other stocks like Mullen are being targeted today. And you can see Mullen's down about 5%, AMC's 4.74%, AMC stock down a similar 4.32%. Whereas a lot of other stocks are actually doing quite well today, right? AMC and Mullen kind of doing the worst out the bunch. Yeah, some stocks are doing worse than them, but a lot of stocks are not. And I think it comes down to the simple fact of greed, right? Hedge funds are getting very greedy. They are running into these short positions as if this is 2022. Whereas in 2022, AMC did worse than the markets, right? If the markets were down 2%, AMC was down like 10%, right? Or down 6 or 7 or 8%. Whereas so far in 2023, you have not seen that happen. AMC has been outperforming the markets to the upside and really outperforming when the markets go down as well. AMC, down or up or down 1-2% when the markets are down 1% has not been too uncommon in 2023 so far. So I think this is more of a comfortability kind of trade. See danger ahead, short AMC, short Mullen, short the retail investor stocks. And I think that sets those hedge funds up for big disappointment when the markets actually do fall. Because number one, they're not going to be hedged out properly when AMC and stocks like Mullen do not fall as much as the markets. And I think that could make a sell-off in the markets a little bit worse, because once they realize that, then they're going to have to go out and short something that's really falling as much as the markets. I don't expect AMC specifically to fall to the same extent the markets could fall here. And just based off what we've seen so far, ever since really March 14th, AMC stock has been very bullish. The stock itself is up from March 14th about 35%. Markets have not done that, let me tell you that. Well outperformed the market. So I think you have a comfortability kind of trade here. People just rushing back into the same things that worked in 2022. And 2023 is an entirely different beast. And I think that is a very bad strategy for them. On top of that, the collateral crisis will likely continue to get worse, as if the markets do fall, and if they fall by quite a bit, well, that's going to put a lot of pressure on that collateral that they are using to remain in their AMC short positions when they are getting absolutely destroyed on these short positions so far. The live short interest of free float for AMC stock is 25.06%, 129.38 million shares currently sold short. Cost bar average 305%, cost bar max 336%, cost bar minimum at about 47%. Interactive Brokers has the cost to borrow rate at about 147%, with about 400,000 shares currently available to be lent out. 0% positive order value from institutional investors today, whereas the total volume for the May 12th expiration on the call side is 60.5%. On the put side is 39.5%. So you're seeing an overweight towards calls being placed on the day today with AMC stock rather than puts, specifically more than likely with retail investors, right? Retail investors are going out and taking this opportunity as, as a buying opportunity, as what we have seen recently. AMC stock has been on a pretty consistent upside move. So there is that. You're also going to get earnings here in after hours, earnings from Airbnb, Rivian, Oxy, Twilio, Affirm, Upstart, Wynn, Dutch Bros, Celsius, and Luminar that come out here in after hours. Wednesday pre-market, Roblox, Icon Enterprises, Wendy's, Tiva, Brooksfield Asset Management, Blackstone, First Citizen Bank Shares, and Village Farms. And obviously the big guys, Airbnb, Rivian, Oxy, Twilio. Kind of all of these companies are important to their specific sectors, and do have a chance to move pretty big, as well as Roblox tomorrow morning. Those are all interesting prospects for some earnings trades, guys. But nonetheless, not going to be a huge factor in the markets tomorrow, considering you're going to have CPI and these debt talk negotiations that are going to be happening today in after hours. So pretty important what we're seeing right now, but it's too early to tell exactly, what's going to happen. Although what Fed Williams said kind of sounds like we're going to get a hot CPI report coming tomorrow. So there is that. Let's go ahead and briefly take a look at Mullen. I want to give you guys a brief update on where the Ortex stat is currently estimating things to be. And again, they just had a 1-for-25 reverse split, so it doesn't look like these numbers are very accurate at all. The live short interest of free float is at 12.63%. Cost to borrow rates are spiking up a lot to 201% for the cost bar average. Cost bar max 330%. Cost bar minimum at about 12%. Same story again, just getting shorted as a comfortability kind of trade. What worked in 2022, people are hoping will work, or hedge funds, I should say, are hoping will work in 2023 as well, when it has not so far. We'll see if that change in trend occurs, but as of right now, that's not my base case forecast. My base case forecast would be for AMC stock to outperform the markets as it has been doing in 2023 so far. So that is going to do it, ladies and gentlemen. Thank you guys for watching. Hit the like button, subscribe to the channel, but most importantly, enjoy the rest of your day, and I will see you in the next one.